Hello, this is the TradeSite U.S. Stocks and Futures Market Preview and Domestic Economic Data Roadmap for the week beginning Monday, the 19th of December, 2016, ending Friday, the 23rd. This will be our last weekend market preview, at least, most likely for the year. And we'll go through why here in just a moment. So here's the ES front-month futures contract. This is the daily chart of the broad market and futures form. And in this view, we just had a 9-bar startup phase that completed here the other day. When you look at the current existing month contract, you get this instead. And when you look at the S&P 500 cash index, what you see is the 13 sell signal that happened on at the high on 3 days ago. So far, that's been the high. We haven't really come in a lot. Obviously, we had a day where we sold off on the Fed announcement, but generally speaking, we've just gotten this signal recently. We'll see what it turns into, but everything was leading up towards something like that, anyways. So here's a look at crude oil, up $1.10 on Friday, closing at $52 even. That's obviously a big move up. Gold gained $7.20, bouncing. And by the way, that's now, if you count the close there on Friday, that's a 13 buy signal in gold. There you go. So that's very interesting, timing-wise, as the dollar obviously has gotten stronger. S&P cash index lost 4 points on Friday, not a big deal. You're not going to move far on triple expiration, we knew that. The NDX lost 18, again, not a big deal. The SOX loses 9. That does not give us, though it does give us a 13 sell signal because we made a new high. So we have a 13 sell signal in place on the SOX. By the way, the first buy or sell signal on the SOX all year. Sell signal right there. Biotech up 3 cents, no real signal there. The VIX down 59 cents to 12.20. Unbelievable. Trade at 1.11. 10-day moving average is at 0.94. Remember, we also had the 10-day moving average dip under 0.85 3 days ago. The same day we got the broad market 13 sell signal. NASDAQ volume was huge at 2.5 billion, but of course that's just expiration volume. It's not real volume. It's just them trading off stocks for options and closing up the options positions. Advanced decline ratio on the NASDAQ was negative 284. On the New York was actually plus 350, but again, most stocks were pegged to their option strike prices that were nearby. For example, Google's strike price was 810, and look at the close, 809.84. Apple actually got above 115 a bit. It didn't quite stay as stuck to that strike price as it usually does. Amazon down $3 on Friday. Netflix down 78 cents. Tesla was actually up 5, which is interesting. The bonds down again. Almost swept new lows in bonds. Unbelievable. Dow Jones, obviously, who cares? Down 8 points. Okay. Let's check just real quick. Where did NTAC close? Because we were watching this thing at that 37 level. Yeah, 36.45 late in the day. All right, so what did the market do during the week? Let's take a better look. Remember, we had the Fed announcement this week. So we had Monday was flat opening, went up, came back, closed down a little bit. Tuesday, the gap up and push higher as the Fed meeting started. Wednesday, flat, then the Fed announcement hits. We shake both ways, and then we sell off pretty sharply. Thursday, we make a little bit of a comeback, but then stall out, come back about midway. And then Friday with expiration, we knew we weren't going to go anywhere. We left no gaps behind on the NASDAQ, on the ES, on the broad market this week. Everything that happened filled, so that's good. We don't have to worry about that. Here's the NASDAQ side. Again, Monday, a little gap down. Did not fill until Tuesday when it gapped up and ran. And then Wednesday, less sell-off on the NASDAQ, but then again, the NASDAQ hasn't really been as strong. A lot of stocks barely moving on the NASDAQ. And then Thursday, a drift, and Friday, a drift. So it wasn't the most exciting week. What do we have to look forward to in the weeks ahead? Let's start talking about what's left this year. We're going to make this. We'll still do our daily previews here on Monday and Tuesday at least. Now, let's once again consider the calendar. This is important. Okay, so Monday's the 19th. So Monday, again, first day back from a triple expiration, might be a little slow. Tuesday, could be the last great trading day of the year. Maybe not. Maybe Wednesday. Okay. There's not a lot of economic data. Let's take a look at that next, and then we'll move on to back to the calendar. So look at that. Monday, no data. Tuesday, no data. Wednesday, MBA mortgage index, existing home sales, crude inventories. Those aren't going to rock the market. Thursday is the third look at GDP. Not a big deal from the third quarter. The weekly initial and continuing jobless claims numbers, those don't really matter right now. Durable orders, FHFA, housing price index, leading indicators, personal income and spending, core PC price index, net ES. So there's some data on Thursday. But by that point, I think a lot of people are already on the road. Friday, Michigan sentiment, new home sales. Okay. So what does all this mean? Why are we looking at this? Well, then we go back to the calendar, and here's what we've got. We've got Monday and Tuesday, no data. Like I said, Monday, the first day back from a triple expiration. Tuesday, maybe the better trading day of the week. Wednesday, I don't know, maybe still something there, and there's some data, but not much. Thursday is where all the data is, but by this point, look, I'm just telling you, the 22nd of December, most people are already traveling to family or whatever. It's a weird one this year because Christmas is Sunday, so both Christmas Eve and Christmas Day are the weekend. So if people are extending their weekends to go visit family, they're going to be leaving on Wednesday or so. Definitely Thursday. Friday, last minute shopping, getting everything ready. Nobody's around on Friday, but it's just not going to be exciting. We will have regular reports for stocks with picks for Monday and Tuesday, maybe Wednesday, and that's it. We'll just be showing up in the mornings and trading intraday if there's something on Thursday. I don't even know if I'm going to show up Friday. Most people won't. Depends on what happens probably on Thursday and we'll make a judgment call at that point. The following week, this is how it works. The 26th is a Monday. Markets are closed. Banks are closed. It's essentially the day that we get off for Christmas, right? Tuesday the 27th through Friday the 30th and again, let's look at the daily chart of NASDAQ volume and let's go back just to any year. Let's start last year. If you line up right before it says 2016 at the bottom there, look at those 4 dots, 4 days that were horrible. And if you see the 1 dot that's really low, the reason is usually if 24th is a weekday, Christmas Eve, it's a half day. That's why you get the dots so bad right down there. But then the next 4 days are the days between Christmas and New Year's. Volume drops off. The way this year has been, I'd expect it to be even worse. So there's just nobody trading. I mean, 1.1 billion shares is not going to get it done. Everybody's made their positions for the year. A couple things to think about. The fund guys at this point, look, they have pushed the market here out of control in certain stocks like Goldman Sachs. We talk about this, all the bank stocks that have run since the election. Here's a look at Goldman. Makes no sense, right, these levels. But they're going to want to try to hold this for the year-end prints so that they can get their bonuses on their hedge funds, right, at this point in time. And then they can sell all this stuff come January. So, there's not a lot of reason. They've already put everything where they want it. They don't want to let it come back too much, blow their bonuses. Don't have a lot of reason to buy. So it's family week for the big fund managers and all the big money. That's why there's no volume traded. When there's no volume, we don't trade. Smart traders trade when there's volume in the market. So that entire week, those 4 days, the stock report will be a recap of what we did the day before, and then we'll just be calling it intraday for the first 2 hours or so as usual when it's exciting. And then we won't be doing anything in terms of stock picks and the report or scans for the most part because there's just nothing that turns up. When the volume dries up, the scans get bad. So that's it. I mean, there isn't much to discuss. Whatever economic data there is, I don't think there's much that week. That's it. We don't have anything else to really look at. So we will be just focused on this trading week, especially Monday, Tuesday, and maybe Wednesday. And then the rest of the year sort of, days off here, days closed here, and we start to work our way into 2017. And then, of course, come January, hey, with this setup in the markets, we've got the sell signals on the S&P, sell signals on the SOX. We've got the bonds trying to at least stop making new lows. We've got the dollar at highs. That is a recipe for not good in the stock market. And you've got some stocks that are so overextended, like Amazon last year was, that nobody wants to sell them. They don't want to lock in the tax gains. They want to get those end-of-year statement prints for the funds. Those things can come back quick come January. So I think we're going to get some excitement in January, of course. But, we've got to get through this first. I'm doing a quick scan. You can't see it. Just looking at what U.S. data comes out in that final week there. Consumer confidence on Tuesday. Pending home sales on Wednesday. Weekly unemployment claims, preliminary wholesale inventories, natty gas and crude oil inventories on Thursday. Chicago PMI on Friday to end the year on the 30th. That's it. And then again, Monday, the 2nd of January, the markets are closed for New Year's since New Year's is also a Sunday and New Year's Eve is a Saturday. So, hey, part of the great thing here is that we get back to work January 3rd. We don't have this weird situation where, New Year's is like a Thursday, then they have Thursday off, but then Friday the markets are open, but who's going to come back on Friday? It doesn't happen. So this is actually, from a layout perspective, really good that we can just get back to work on January 3rd. But between here and there, let's be picky. Let's worry about trading in the early times when there's action and activity, if there is any, and let's not blow the gains for the year ending you've made trying to force trades in a dead environment. So again, Monday, Tuesday, Wednesday, and then back off. And we'll get going from there. Charts, as usual, brought to you by eSignal. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple weeks, and we'll even extend it over the holidays. Have a great Christmas. Have happy holidays for everybody. Happy New Year.